Welcome back, everyone. This is Spencer with Numbers of Finance, and this is Thursday, April 4th, 2019, and we are back with another market wrap video. Starting off this video, let's talk about what happened today in the markets. We can see on SPY we closed 0.27 percentage points in the green, but if you look at QQQ, it actually did close slightly in the red, a fraction of a percentage point. And so basically, the broad markets closed flat today, not much movement within the day. The actual price movement of the day was within half a percentage point from top to bottom. And so as you would expect, there's nothing technically significant that happened. There's very little that's new to report on, so this video is probably going to be pretty short. But we'll just kind of go over what we've been saying for a while now and give an update on where we stand for the markets. And let's start off by taking a look at SPY on the daily charts. The two price levels that we've been looking at, that a lot of people have been looking at, are 282, which is this triple top, this gold line here, and 287, which is this reaction high from back in early 2018. And for a while, for the longest time, for weeks and months, many people, including ourselves, were talking about how this 282 triple top level was going to be a significant price, a significant teller as to whether the market is going to be taking another leg down or if we're going to be heading to new highs. And so far this week we have broken it. We're above it, but we're not above it in the way that we would have expected to be above it. Usually when you see these price points that are being fought over for weeks on end, they don't get, right now we're just creeping above it. We have very little volume, we have very little price movement. We had one gap up over the weekend, that was it. And since then we've just been moving up and down. We're getting back into this grind that we've been in. It's not the impulsive breakout that we would have liked to see for the bulls. And so does that mean that it's gonna get faded? Not necessarily. It's just something that's quite interesting to take note of. Now, getting to this 287 price level, we have been stalling at it. We've had 2 consecutive days where we came up and we tested it. We even did break above it a couple pennies, but it got faded within the day. Nothing significant there. The divergences are still very much so still intact. We can see the price is moving up, whereas the momentum is going down on the RSI and the MACD. Again, these are usually pretty powerful, whether they're bearish or bullish. The divergences play out so long as they stay intact. We have to see it confirmed, and in order to see it confirmed, the markets have to start to head down, which is what they have not been doing. It's also kind of interesting to note, if you take a look at the weekly charts, how low volume this entire week has been. We've been mentioning that this breakout has been paired with very low volume, just as the Fed pop a couple weeks ago was paired with low volume and it got faded. This entire week has been incredibly low volume. Let me expand this a little bit so that you guys can see. But we can see here, yes, this week has only been 4 days so far and we still have a Friday left to close. But let's not take into account all of these back when the market was in the normal bull conditions. But ever since we've started this first leg down that we've had, and we've had this great rebound since then, this is by far the lowest volume week that we've had. The only exception to that really was this 1 week here in February, I believe. But that was also a President's Day, so that was another shortened week. So really, yes, we still have another day to go. I think it would be pretty unlikely for us to close back below this 282 level, but at the same time, where exactly can the bulls take this? This is the reason that we're clinging on to this bearish case. There's very little. What can the market do at this point? Let's go through the different options that they have on the daily chart. Not options, but the different scenarios that we have. There's the obvious bearish one. Momentum is pointing downwards. There's a lot of technical indicators on different time frames that say that the markets should be heading downwards from here. But we've had those for a while now and the markets haven't been going down. But it's still certainly a possibility that we get another leg down, maybe a third leg down in the overall bear market, or maybe a significant healthy correction. Very possible scenario. The second one is consolidation, which is kind of what we've seen for the past couple of weeks now, past couple of months even. Yes, we've had these fluctuations up and down, but by and large, we've kind of been within this zone with a few aberrations, a few whipsaw signals. And then the third one, which is the bullish one, what would it really take for us to push on to new highs in the near future, meaning like the next couple of weeks to the next month or so? it would take a lot, even if, hypothetically speaking, let's say that tomorrow, Friday, we close out the week with a nice impulsive green candlestick to the bull side. That's what? A 2% candlestick, very unlikely to happen. I certainly am not expecting this to happen, so don't mistake that. But even if we come up and test the new highs, what will that mean for the momentum? Well, we'll still have a very strong divergence on the MACD. It might even be stronger because you see this line here that's divergent from the momentum line. This will be pointing significantly higher than it is now, whereas the momentum would still be heading downwards. The RSI would just breach back up to being incredibly overbought, and yet again we would have the same technical indicators that we have, which is pointing for at least a pullback, if not a third leg down. Now, I'm not expecting this big green candle to be printed here on Friday. That's not what I'm calling for. All I'm saying is that right now the risk to reward is so incredibly skewed to the downside. It would take so much at this point for us to go long on a trade, even though that is still, the markets have been very resilient for months on end now. We've seen time and time again where even though the momentum is heading downwards, even though we have sell signals, the markets have still managed to push back up. It still is not enough reason for me to go long with this kind of unfavorable risk to reward ratio. I mentioned there wasn't much to talk about in this video, and so this is probably the last chart that we take a look at, but this is XLK. For those of you that don't know, this is an ETF of the tech sector. So similar to QQQ, however, QQQ it's weighted a little bit differently, and it also has Amazon and a couple other small sectors leveraged in. But XLK, the reason that I'm focusing on the tech sector here is because if we are heading into a third wave down, it is most likely going to be because of the tech. We saw tech led the way down for this first leg down. It's a pretty safe assumption that if we are having a third wave down in the bear market, that it will be led by the techs. So taking a look at the analysis, very interesting setup that we have here. We can see that we're testing the all-time highs. The past 2 days we've came up and we've actually kissed them. We see here on Wednesday, you can see that price in the top left corner. The high was at 76.26, whereas the all-time high was 76.27. So quite literally within a penny of testing the all-time high is where we're at right now. All-time highs always act as a very significant overhead resistance, and so the fact that we're testing them and we're stalling at them is significant. What else do we have? Well, we sort of have divergence. Normally what you like to see is the price going upwards while the momentum is going downwards. But right now the momentum is kind of flattening out, whereas the price is still skyrocketing. Still worth noting, and still is technically a divergence. But more significantly, what I want to see is this trend line break for the bears. Let's go down to a different time chart. Yeah, this makes it look a lot better. But we can see here the 76.25, we'll call it, this price level, tested once, tested twice. We're testing it a third time. If we test this and we can break this trend line down, that'll be very good for the bears in the broad markets. And this might not happen. There's evidence that shows that the momentum on XLK is bearish, but again, we've seen time and time again in the market now where even if the momentum and the technicals are bearish, the bulls are still finding a way to push it higher. And so maybe that happens again. Maybe we come down and we test this trend line and then we push back up to new all-time highs. But if we come down and we break this trend line, it's something to watch, because this would be the kind of catalyst that we're looking for a significant pullback, if not another wave down. And so I think that's all that I have to touch on this video. I'll leave it there. If you like the video, please leave us a like and subscribe. We greatly appreciate it. Until next time, make sure you get your numbers up.